What's up, Matt?
Hey, bud.
Oh,
What's up, Greg?
hey, what's up, guys? How are you?
Okay.
How we doing? Oh,
Hey, what's
Russ.
going on? What's going on, Russ?
Not too much. Just waiting to be part of the action.
All right, we're gonna.
Nice to have you in the game, Russ. I mean,
Yeah, likewise. Ditto.
We're
So
gonna.
I'm coming through loud and clear. Then you guys
Perfect.
can hear me all right? Okay.
Yeah, perfect. So we're gonna start. We're gonna put Russ in the back room, and then we're gonna do a few seconds, and then bring you in. Russ, is that cool?
Absolutely. As I'm at your disposal.
All right, appreciate
Literally.
it. All right, everybody, we're starting out. Have a good crew on LinkedIn. We're waiting on YouTube and Twitter, loading up. We're waiting for the new Twitter people to get on here. So I think we're streaming about 7 different locations now. Everybody.
nice.
Yeah.
Nice.
Which is good. Let's just wait for a few more people to get in, and we'll start.
I better not swear this time.
You all right, man? You got a little frog in your throat, man?
Yeah, I think it's allergies, but I don't know. I mean, maybe I got a cold or something. I took a COVID test on Monday, and I'm negative. So, but I have a Barry White sound going on here.
Oh yeah.
I think that's a good. It's a good sound for you, Matt. I mean,
How you doing? Give me a PO.
Hey.
You mind if we dance with your
okay.
You remember that from Animal House? That's one of the greatest scenes ever. When the guy puts his hand down to take her hand, and his hand is like 8 times bigger than hers. It's like a little baby hand,
All right. We'll launch this before we take this any farther into the movie. So everybody, welcome to This Week in Lumber, Materials Exchange, hosted by mxlumber.com, where we are the premier, the only digital B2B lumber exchange out there. Matching lumber all from Europe, North America, Canada, Brazil, every point in between. Buyers and sellers come on, dynamically put bids and asks on, digitally go back and forth together. We ship the goods and then we move the money. So we are creating a lot of transparency in the market. Matt Beymer from Hampton Lumber Sales, Gregg Riley from Sitka USA. I wanted to say for the people that are first on here for the first time and listening, why they should listen to this show. I've known Matt and Gregg for a long time, and the experience between both of them, from lumber futures to lumber buying and selling, to running distribution, to selling multifamily, retail, all other points. I don't think in a single person's career they could get as much insight from both of these guys. So I'm glad to have both of you on. And I'm happy to be hosting this so we can talk about some different things in the market, guys.
I just want to, have a, disclaimer. You know how CNBC, they put up the analysts and they look for conflicts of interest. Matt and I, and I'll speak for Matt, he can disavow this if he'd like. We have a myriad of conflicts of interest. We're here. We're shamelessly self-promoting ourselves and our business. Also, MX Network, MX Exchange.
Yeah, and I appreciate that, Greg. And as long as you don't call me sir in an email and try to sell me crypto, I'm fine with it.
Let's not forget the guy talking, Ashley, has a wealth of insider knowledge of our business as well. I mean, come on, don't short sell yourself there, buddy. You've got quite some experiences on your resume.
Well, I appreciate that. But I want to make it about you guys and not me. But thank you. And so, look, we're going through some tumultuous times in the industry. In lumber, when I go through social media and I talk to people on the phone, a month ago, economists, everybody was saying everything is immune in lumber and immune in housing. And we all know from our experiences going through different moves in markets over our lives, right? That's everything plays out different than we think, but nothing is ever immune from a major disruption in financial markets, which I don't know if that's the correct way to put it. But over the last few weeks, I've noticed people saying like, hey, housing may be starting to slow in some areas, or there's more new houses coming on the market in certain areas for sale. And common sense wise, that makes sense to me, right? If you're trying to sell something, I would think that with everything going on, if it's still a seller's market in housing, which I still think it is, you're going to do that. How does that affect us? Well, everybody certainly feels a little bit less like they have less money in their pocket when they look at the stock market and everything else. And it eventually bleeds over into the pig farm that we trade in, which is lumber. And I say pig farm in all due respect, just like a figure of speech. Greg, Matt, what do you think of that?
Go ahead, Greg.
Yeah, listen. I mean, I was just on the phone call with the producer, and I mean, here's the reality. We've had 24 months of unprecedented market. I mean, our industry has been a huge COVID beneficiary. When you look at profitability on the producer side, average prices are over the last 24 months are probably triple what they historically had been. All you have to do is look at the quarterly reports with mills making, 500 to $1 billion in a quarter. All you have to do is look at all the mills that were bought in the 08 to 12 time period. I call that the dark ages of our industry. How far we've gone from that. So to think that what we've had for the last 24 months is going to continue is not realistic. There's going to be a retrenchment, and everybody's trying to calculate what's that going to look like? What's the timing of it going to be? And the one thing that I do know is if you talk to 10 people and you can get 7 or 8 of them to tell you the same.
You kind of cut out for a second, Greg. So what are the 10 people telling you right now?
I think that the 8 out of 10 people right now all feel like the market's going to have a pretty substantial retrenchment in price. And so, either it's not going to be as much as they expect, or it's going to be more.
Yeah. Understood.
Than they expect, I guess, is what I would say.
Matt, what's your feeling on that?
Go ahead, Matt. Sorry.
No problem, man. I'm just listening. I think we're just transitioning away from a real frenzied and hysterical first quarter. Where the demand was, off the charts and the supply was crimped at the same time. So, we've been talking about logistics for a long time. We've been talking about port issues for a long time. We've been talking about trucking issues. I mean, we've had issues and we still have issues. But what's changed is we're not going up limit, down limit. We're not seeing these massive moves, what I call emotions. The emotional portion of this market, I think, is done for a while. What we're seeing now is a lot more of an even field trade where you have kind of like-minded buyers and sellers. Everybody just wants to do their job and continue keeping the wood flowing. And some of the barriers to that have lessened a little bit. So the transportation has gotten marginally better, right? People have finally started to receive some of this really late lumber that they've been waiting on. Also, at the same time, people's desire to carry large amounts of really expensive inventory has gone down. I mean, it's dangerous to hold on to a whole bunch of $1,400 lumber. Eventually it's going to go back to 600, or 500 or 400. This is just the nature of of our commodity, right? Our commodity is not spent the last 30 years in 4 digits with a comma in it. Our commodity has spent the last 30 years at an average of like, say, 450, 500. Let's just be generous and say
You put a
450,
comma
500.
when you put a comma when you write 4-digit prices? Do you put a comma? I don't.
I do actually. It's a habit. I put a comma on everything that's after,
I know
but
one belongs there, but I just don't do it.
yeah, I just
brought-
think that, we're kind of transitioning away from the frenzied first quarter to more measured second quarter, and we're gonna continue a measured market. I don't see a lot of hysteria when people realize, hey, look, it's just a waiting game right now. You got to wait for LVLs, you got to wait for OSB, you got to wait for, specialty products like siding and whatnot, and labor's hard to get. So why beat your head against the wall to go chase a bunch of $1,400 lumber? It doesn't really make that much sense.
Matt, you know what? I've used this very vivid description with some people lately about how you think about this market is, when you have that feeling and you're like, oh gosh, I need to get to a toilet really quickly, and you're like, oh, rushing to get there. And when you get there, what happens is that's what we're waiting for in this market.
I don't think it's going to be like that, honestly. I just think it's going to be more of a, give and take type of like a normal trading market. I think we're in a normal trading market right now. We just have high prices, right?
So are you guys noticing, Matt, and you're in the logistics side? I saw Bill was asking a question. The lack of drivers is a problem. How is that going to change? And Charles De La Torre was saying East Coast diesel supply ? I mean, won't a lot of that get taken care of as people quit trying to build as much inventory in every commodity?
Well, ultimately, you're seeing demand destruction with high prices and higher interest rates, right? So where does that impact us in the long run? And I think people have that in the back of their mind. And also the customers, the ultimate customer of this lumber that we're all talking about is the home builder, right? And the home builder's got some math to do. Do they want to keep buying the land? Do they want to keep, slapping up unsold units? Maybe they slow down a little bit. I would think, if I owned a construction company, I would probably be looking at the future with a little bit of fear. So what happens when fear comes into play as an investor? What do the smart investors tell you to do when you're afraid? They tell you to do nothing. They tell you to conserve your cash, right? That's what they tell you to do. So we'll see what happens here. I'm not overly concerned about our industry. I think there's going to be a lot of buyers and a lot of sellers, but I think the balance of power is going to shift to the buyers here as we move through the year, not to the sellers. I think the buyers are going to gradually win this. By the end of the year, we're going to be looking at a much different type of market than what we've been coming through from the last 2 years.
But
I mean,
like Bill's question, everybody else, are you all, and Greg, you guys are into it. Is the trucking cleaning up at all? Is it still the same issue it was a month to 2 months ago?
I no longer have any issue with trucking at all. I mean, we've adjusted our rates and we're paying 50 to 100% more than we used to, and those are rates that obviously truckers can make money at with $5 and $6 diesel. I mean, there's always going to be like spots and lanes that can be problematic, but I'm seeing availability of trucks at.
Okay, good.
Yeah,
good.
I think the trucking is definitely freed up in my world. And I think overall for Hampton also, that I think most of the trucking problems that we've been experiencing have gone away. We're still battling constantly on rail. That hasn't really gotten a lot better.
I heard one more question. This was coming from YouTube. With high energy prices all over, maybe throughout the summer, would lumber even go much? I think they said go much higher during the summer compared to what happened in the summer of 21.
I mean, I'm going to go back to where we were and Ash's. Consumer price index came out today. It's up, and the inflation is not transitory. It's going to be here for a long time, and the reality is only there's two ways that you can solve inflation. One way is you cut the availability of money, so there's not money to chase the goods, and that gives relief. And the other is that you increase the supply of products. You have pro-growth policies, and we know that we're going to get no pro-growth policies out of the current administration. So that leaves it basically up to the Fed, and they have to raise interest rates to the point that slows demand. End of story. And so,
okay, appreciate that, Greg.
It's just a question of timing.
Right on. Hopefully that answers the question. So I noticed we're getting up against, I wanted to get, so we have a great guest on today, Russ Taylor from Russ Taylor Global, which is basically wood and market consulting. But Russ is, I was explaining to one of the younger guys out on our floor today. He asked who Russ Taylor was. And I said, look and this guy's a good golfer. I said, Russ is like the kind of the guy I was explaining it to. I said, I'm a terrible golfer. I'm like a 22. I go, imagine me going out in a course and telling you what I'm going to hit on the next hole that I've never been to before. And you're a scratch golfer and you're Russ, and you look at me and shake your head because you know the details of the course better than anybody, right? So Russ has run conferences up in BC, globally all over the world for his whole life, has got tied into and has consulted with most of the largest lumber and logging firms in the world. And we're honored to have him on, Russ. So thanks for coming on.
Yeah, my pleasure, and good to be with you guys again.
You bet. You bet. So one of the things I saw where a couple of the large BC mills had some of their earnings and came out and talked about them. And it kind of ties back into what Russ, Greg, and I were chatting about before you came on this week. Everybody throws these numbers out, me included. What is the cost of production in North America? We'll start out with BC, right? And I think you kind of came up with some, what was it last year? What is it now? What could it be, right?
Yeah, and sure, it's a bit of a moving target. It's the log price is the big wild card in all of this, and it's government stumpage rates that are set every quarter, and it makes it a real nightmare trying to understand the cost structures. But BC cost structures are the highest really in North America, and they have been for, I don't know, maybe 10 years, more or less for most of 10 years. And it's tied to the government stumpage policy that always lags the market by 3 months, but it also ties into the open market sales that the government conducts as well. And that leverages up the stumpage when logs are tight across BC because of the mountain pine beetle. So, looking at my numbers, like last year in fourth quarter, following the big crash, costs in the BC were, this is Ebitda, earnings before interest, tax, depreciation. Cash costs would be below that, but around $550 to $600 per thousand, which is why mills were curtailing when prices hit, the below 400 in that quarter. And that's kind of a range depending on where mills are located and where the logs are. Today, it's much lower. Stumpage rates are quite a bit lower. They'll go up again July the 1st, but I pegged them somewhere in the $425 to $500 per thousand range, again, depending where you're located and what logs you're cutting. So that sounds really good, except all the other regions in North America are dramatically lower. That's the issue.
So let's talk about that. We talk about the South, and I had a conversation with a few people this morning in the South. Log prices, for the most part, haven't really moved much down there in a long time. Does that sound correct?
Yeah, since about 2008, the log prices have been kind of locked in. They move around a little bit. They're moving up a little bit now, as supply is tightening, as more mills are operating. But they've been around 250,000 board feet over that time period. So when you're selling lumber at $1,000 a thousand or more, it's a lot of cash you're earning. And this is Ebitda margins. Again, cash costs are lower.
So that's 250 US when you're in a southern pine mill producing. That's the basket they're producing, right?
Correct. That's the kind of the sale on a sales average basis. Yes. If you move it up to well, actually the 550 to 600, that was an SPF price. If you actually move it up to the SPF price, it moves up about another 5 or 10% to account for low grade and stuff. So it's a little bit higher than that. But the overall cost on the sales average in the U.S. South is about 250, a little bit higher on a 2 and better price.
Now, just with Matt being on from Hampton, do you have any? And we didn't even ask about this. How about the Pacific Northwest? Is there any stats on that one, Russ?
Yeah, and it's log price again. Log prices have been moving up quite a bit this quarter. I think they're the highest they've been in a few years, and but still I have them estimating somewhere, if you look on a EBITDA basis, around 350 to maybe 425, depending exactly on what you're cutting, and on a lumber price basis, probably closer to 400 to 450 on a 2 and better basis.
Judy was asking, BC mills have a great percentage of logs that need to purchase. They need to purchase. Is there a bidding war right now going on?
Oh, yeah, absolutely. Most mills can't find enough logs, and so they go to what's called BC Timber Sales, which is the government auction house that auctions about 20% of the logs, and that crazy prices are paid for those, and then that in turn goes back into the stumpage formula as part of the cost of logs, and then they put in the lumber price on top of that. So that's why when you have a scarce supply of logs on the margin, you're going to pay almost anything to get that last bit of logs to run your mill, and so therefore the auction price is very, very high.
So what percentage of the mills right now are buying on auction versus on contract, so to speak, I guess to say?
Yeah, it's a good question. I mean, the mills that have timber under license, it's probably around, depending on the mill, but say 60 to 65% perhaps, somewhere in that range. Some are quite a bit higher, and some have zero. So it's they're all on the open market. So it's a tough gig these days.
Ashley,
yeah.
One thing that's changed here in the last 10 years in BC specifically is species switching. So a lot of the sawmills in British Columbia have had to learn how to cut hem fir or Doug fir rather than spruce. And I'm seeing more of that. That trend is continuing, not decreasing. It's actually increasing.
Yeah, and they're trying to time the stumpage rate sometimes accordingly because of that lag effect. So they try and play the game as much as they can around the rules.
Sure. I mean, one of the things that really highlights to me is, and we'll see some of this.
Ash, I mean, we in Europe at a conference, and I know that's one of the things that we talked about last week. What?
Yeah. So let's Russ, you were at a conference, and and some of the things that you got out of there we're talking are pretty amazing. Let's you had 3 slides here that we want to talk about. Maybe we could lead it in. Before I talked to you this week, I thought for sure all the logs coming out of Russia had been cut off immediately and weren't shipping anymore to Europe or anywhere else. Where am I wrong in that whole thought process?
Yeah, well, Russian logs aren't flowing because there's a log export ban put in on January the 1st ahead of the war. But the lumber is still flowing. If it was sold under contract prior to April the 8th, that was part of the 5th sanctions the Europeans put on, and they can flow to European ports until July the 10th. And that's because a lot of the wood was already purchased by European traders, and it was now going to be stuck. So that's a kind of an avenue that's opened up the Russian wood for the next couple more months.
The other question was, let's go to the next slide, because I think this shows a little bit about the conversations that we've been having in the trading community about how much. Which slide is that? The one that kind of shows how much European wood is flowing over here versus the rest of North America. It's slide number.
It's the next one, Ash.
Slide number Yeah, there we go. So a lot of the conversations I've been having, Russ, and you see in social media, people were saying there's going to be less euro to North America. And from what I'm seeing on these slides, it doesn't seem to be the case right now. As a matter of fact, Greg and I were looking at some of these slides. We were before the show, and noticed that European production is darn near up to where it was in 2004 and 5, or European coming to North America. What was your feeling from the conference of what's going on there?
Yeah, well, the European wood, they've always figured out how to make dimension lumber for the U.S. market. It's just, some of the players in 2005 and 6 aren't there anymore, and they've been replaced by others. So with the high prices, though, that's what attracts the Europeans. They can produce more if they wanted to. But most of the bigger companies I've talked to kind of allocate their wood at the start of the year, and they try to stick to a program. So basically they like the U.S. market, and they've been increasing it every year accordingly. So the volume so far have been increasing as the prices have gone up and the demand's gone up. And this year, in first quarter, they were up again 15%. Again, tied to program selling and their supply chains they developed over the years. So, the question that everyone's got about Europe is, where are they're going to be short about, 5 billion board feet of wood from Russia, Belarus, and Ukraine. How is that going to get made up? Well, quite honestly, the wood quality and the log quality that's used for the wood supply going to these mills that service the U.S. market is not the kind of quality that they're going to be missing in Europe. It's going to be the higher quality going into furniture or doors and windows, decking, that sort of thing. So from what I've been hearing and talking to a lot of people, a lot of the companies in Europe are probably not going to change their marketing plans on the U.S. side, and it'll be at least certainly the medium to large companies. The small guys probably will, as they get a lot of pressure from domestic market to supply some products. So my sense is that going forward, I think we're going to see very little change in the European supply. And maybe as if demand starts to slow down towards the end of the year, in the U.S. or maybe in the first quarter, it'll ease a little bit. So maybe year over year, looking ahead, say the second half into the first half of next year, maybe it's down 5 or 10%. More a function of demand, not a function of supply. So that's my sense.
Yeah, I guess, Russ, the conversation I had the other day was about the domestic market demand really collapsing at this point in
Europe,
and now we don't know how long that's going to last, but certainly in the short term, the domestic players there are all backing off.
Are you talking about in Europe, Greg?
Yeah. Yes.
Okay. All right.
Mm-hmm. Yep.
Yeah.
Understandably so, right?
Exactly. So the breaks are going on, and everyone's nervous about prices. Prices were roaring along through April. They flattened out this month, and the question is, are they going to go up or down next month? Or, I think there's some upward pressure again as the supply will tighten. But if you look at the returns in selling into Europe right now versus selling into the U.S. market, the U.S. market is by far a much better option. So,
right.
And I think, if Europe slows down more in fourth quarter, and that's where you see much lower prices, the U.S. market's still going to look good. That's why I don't think we'll see a big change in the European supply.
One more slide.
Honestly, I'm actually happy to hear that. I am. I mean, we need the material here, right? It's good lumber. It serves a need, and I'm glad to hear that. I was a little worried as the year went on that because I dabble. Greg's a professional at this. I dabble on importing European lumber, but I do enjoy the business, and we do need it. I mean, it's not like the Canadian mills are getting bigger, right?
Well,
I mean, we're seeing that on your charts, right? You're showing that their volumes are going down, and Europe is helping to replace and offset the lost footage.
And think about, given the current environment with the railroad, what a godsend having
Yes.
all that European lumber up, along the East Coast and Gulf ports have been to the customers to be able to backfill against those shipments.
I couldn't agree with you more. There's nothing you've ever said in a year of our calls that I didn't really agree with that much, but that one I agree with 100%. You're right. You're absolutely right.
That's good. Well, look, I talking about this, let's bring up slide number 6 if we can, because this kind of hits home of what the real trend we're seeing too is, where U.S. South production is moving in the direction we think it's moving in, right? From CapEx to new mills coming on. You can just see the steady, like as Russ's chart says here, look at the U.S. output steadily increasing in the U.S. South. And this Matt was alluded to what Russ was saying, less in Canada. And you can see that in both of these charts, how now I believe that the 2022 Russ is an estimate of the production, but we probably, is that correct with the asterisks there?
Yeah, that's an estimate, and I think the only thing that probably has changed since I did this a few months ago is I think the U.S. South production is going to be a lot higher this year. Finally, with all that new capacity, that's been ramping up slowly, and no COVID, I think we're going to see a big spike in U.S. South production going forward. So
that's a good point. Greg and I were having breakfast Saturday, and he looked at me and he said, I think the biggest surprise is when everybody wakes up and realizes how much Southern pine production came on this year.
Yeah. Well, you know where you can really see it, Ash, and I know you and I spent a lot of time looking. We spent a lot of time looking at charts, but when I was doing some basis work over the weekend, looking at how undervalued pine prices are historically to spruce prices, and I mean, when you could see it when you look at the print numbers, but it's really stark when you look at the cash to cash basis charts. I mean, it's off the charts. I mean, I was made a point to somebody is I could justify selling July $250 below the current cash market and have a good basis trade on some Southern pine items.
You just cut out for a second, but I think what you were saying is basically selling what's expensive and buying what's cheap. Selling the board in July, even though it's a discount to the current cash market in its market relative to what the pine is, right? I mean,
the pine prices are undervalued even to a $250 discount.
Gotcha. One thing I want to just point out too is on if we go to slide 9 for Russ. Russ, maybe you could tell us a little bit on slide 9 what we are seeing here. Let's see here. That's Ukraine. Let's go to slide. This is kind of showing what one of the projects you're working on.
Yeah, and shameless promotion, I guess, but I mean, I forgot.
We encourage those, Russ.
Yeah,
we encourage it.
I've sort of noticed that, but so. But no,
I didn't want you to be alone out there feeling any angst.
Yeah, thank you very much. But no, we're working on a report on this whole Russia-Ukraine war. I just did a webinar with some of my team members this morning, and it's about kind of what we think is going to happen. There's so many unknowns going on that it's really hard to put it down. But we're going to try and take a stab at it and have a bit of an outlook on all that. So that's something that's coming up in the next little while that we're working on. So it'll be of use to some that want to know more perspectives around global markets and what to expect.
And then on page 10, you've got the Canadian timber and lumber supply outlook.
Yeah, it's another report, another team I'm working with. It's sort of a global analysis, but we're going to focus really on the Canadian timber supply, and then feed it back into the U.S. and look at North America from a global perspective. So it's just something we're working on as well. That we have all this information. We want to try and get our story out because it's a little different, I think, than some of the others. So that'll be our job. So
Russ, I know that obviously the work that you do on supply, production, costs is top notch, first rate. I mean, do you spend much time on the demand side of markets? Or is that kind of tangential to the supply side?
Yeah, I mean, I really spend more of my time on the supply side because most of the analysts and economists don't get it. They just don't get it on the supply side, and yet they spend all their time on the demand side and get it wrong. So I can spend a lot less time and still be wrong, but be close to them. And but they get the supply side wrong all the time. So that's kind of where I spend my time on supply, on cost structures, global trade flows, and really you can take a consensus demand story and be close without any work, right? I still do my own work, and I usually bet against the economists. Every now and then, a consensus forecast, going against the consensus, is what I do, a contrarian view, and it's paid off many times taking the contrarian view. I'm getting close to that a little bit too on some of the on the U.S. market. I think the housing market is strong. But is it really that strong? When it comes time to inflation and high mortgage rates and high home prices, I think there's a little more of a downside coming than perhaps all the economists are harping on. So that's sort of my view. It's not yet, but it's later in the year, perhaps.
Well, Greg always says that how many homes are for sale. When they're talking about less than 2 months inventory, Greg's like all of them. Eventually, all of them are for sale, right? But hey, Russ, I have a question for you. Up in Canada, maybe some of our viewers don't realize the political climate's changed up in Canada also. And how does that impact the ongoing supply chain issues that we're talking about here from Canada specifically? And so that also involves the CN Railroad, the CP Railroad, and the mill licenses to cut and harvest and exporting and importing of logs. There's a lot of factors going on here, but I think you probably better than anyone in our entire industry can really talk about that.
Yeah, well, if we have another 20 minutes, I could probably answer that. But I mean, it's a whole bunch of crap going on, I guess. It's all about.
That's a technical term. Crap.
Yeah, exactly. It's political pressures in BC are reducing the harvest. They're giving licensees from companies over to First Nations. They're doing a lot of really negative things on the industry, which is really, really, really unfortunate. And so that's going to the industry is now winding down. One of the analysts called it BC uninvestable, which I think is the greatest quote I've heard this year. There's just no more reason to invest in BC. We have the transportation logistics problem from the big storms we had last November. Railroads and trucks aren't working as efficiently as they should. The railroads are part of the problem, but so is the infrastructure. So inventories at mills are stacked up. They can't get it out. In the West, as you go further across the country, it's not so bad. At the recent conference here in Vancouver, the president of the Canadian National Railroad, the new president, indicated that they agree that there's a problem. And, that's all they can say. That to fix it is a huge issue because it's like containers are all stuck in various ports, right? It takes forever to fix it. So they have a big issue trying to fix the rail side of it as well. I think Eastern Canada is flowing pretty smoothly as far as I know by comparison, but it's the West and it's BC that's just a real mess from every way you can look at it. And cost structures, infrastructure, logistics, politics, everything. And so that's why the big BC companies and more are investing in the U.S. South because there's nowhere to grow in BC. It's only going to shrink. So I've
heard it referred to as the second spotted owl crisis. So, maybe people don't really understand how bad it really has become in British Columbia, but it's bad. I mean, it's not a good environment right now.
No, it's just almost on it's just going to be limping along, and 40 mills closed in the last since 2005. Another 10 mills are going to close in the next 3 or 4 years. It could be longer than 3 or 4 years, but there's about 10 mil wood supply wise, another 10 mills to go. So, it's just shrinking. It's about half of its production it was back in 2005. It's just
wow.
Really, really shrunk.
Wow.
Yeah.
So
and that's all been replaced basically in southern U.S., correct?
U.S. exactly. Southern yellow pine. That's where the growth is going to come from for sure.
Dean Ponak was asking thoughts on South American lumber. That's something I'm not. I don't. We have some South American panels listed here, but I have noticed some plantation non-grade stamp pine and industrial has been coming over. But they have a large timber base down there. Will any of that make it up to here as graded lumber, or what do you think of the South American markets in general?
Yeah, well, the industry there, it's the wood quality is not dense, so they don't produce structural lumber for the U.S. market. Same with New Zealand, Australia. It's all used domestically for homes if they're going to build with homes. But in say Brazil and Chile, it's really non-structural lumber, boards, pallet material, appearance grade products, some clears in moldings and boards and that sort of thing. So it's a different industry, and they ship a lot of their lower grade into the Middle East, North African markets as well, especially radiated pine, and but a lot of boards are moving into Brazil, into the U.S. from Brazil. That we see as a bit of and plywood. So there is opportunities to grow the business, but just not in structural lumber. It'll be in appearance grade products, and they have to get it to markets. As the freight rates go up, that's a bit of a negative. But if there's high price markets, that's the advantage. And so it's trying to find your high margin markets as they're always shifting.
Gotcha. Well, listen, guys, we're up against 40 minutes. I could have sat here. We know from being in the lumber business, we could sit here and talk for the next 5 hours about this. But Russ, man, I really appreciate your detail and coming on here. You really looked up to in the industry, and I hope people will call Russ, send him an email to sign up for some of his consulting, some of those items that he had. Matt, thank you for showing up, and Greg, appreciate it as always, and we'll look forward to doing this again next week.
Russ, what is your email?
Oh, Russ Taylor at russtaylorglobal.com.
Great, thank you.
Thank you, guys.
Thank you, Matt.
Appreciate it.
Appreciate it, everybody. Y'all have a good day.
Russ, always great. I appreciate.
Yep. Anytime, guys.